If you're buying a home in today's market and you've considered new construction, you've probably come across builder incentives, typically thousands of dollars to buy down your rate. But here's the question. Should you take these incentives or negotiate for a better price? Today, we'll break it all down to help you make the best financial decision. Let's get started. Builders want to sell homes, even in a high interest rate market, and they're pulling out all the stops to make it happen. A recent study by consulting firm John Burns Real Estate showed that some builders are offering up to $34,000 to buy down a buyer's mortgage rate by 1.5%. That's a huge draw for buyers looking to lower their monthly payments. But here's the deal. While these offers sound great, they're not always as straightforward as they seem. Understanding your options is key. Rate buydowns are a popular tactic. Here's how they work. Permanent buydowns lower your rate for the life of the loan. Temporary buydowns, like the 2-1 buydown, give you a reduced rate for the first 2 years before it adjusts to the original rate. Both options can help with affordability, but they come with some strings attached. There are clear benefits to buydowns, like lower monthly payments and early interest savings. But keep in mind that the cost of the buydown is often baked into the price of the home. And if you plan to refinance in the future, those savings might not last as long as you think. For example, the builder pays $30,000 to buy down your rate, which, remember, you're actually paying for this in the home price. A couple years later, rates drop and you refinance to an even lower rate. That's $30,000 gone. It's crucial to weigh the upfront cost against the long-term savings. So why not just ask for a lower price instead of a buydown? Great question. Builders typically prefer offering buydowns because lowering prices can hurt the value of the entire neighborhood, affecting future appraisals. And a lower price may not be the best option, as odd as that sounds. For example, a $10,000 price reduction might lower your loan balance, but it could still leave you with higher monthly payments compared to a buydown. It's all about striking the right balance. When comparing new and resale homes, consider this. Resale homes don't come with incentives like buydowns. While the median price for both might be similar, new homes often provide better overall value with their incentives. Before you decide, ask yourself, 1. How do the upfront cost of a buydown compare to its long-term benefits? 2. Will you likely refinance in the near future, potentially offsetting the value of the buydown? And 3. Are there other incentives like upgrades or closing cost assistance that might provide more value? Builder buydowns can make new homes more affordable, but they're not free. Make sure your choice aligns with the financial goals and take time to compare all your options, including resale homes. For more information on how you can make smart decisions when buying a home, visit mortgageresearch.com. If you found this video helpful, please like and subscribe for more tips and hit that notification bell so you never miss an update. Drop your questions in the comments. We're here to help. Thanks for watching and happy home buying.